Good morning once again. We seem to be having some technical problems this morning. This is our second time around. We've got stocks momentum down, gold soaring. I guess we should take a look. U.S. stocks ended down last night despite Fed Vice Clarita's assurance that inflation is under control. Not satisfied with the administration's decreased infrastructure proposal, Republicans are again preparing a counteroffer that could nearly double their originally proposed $500 billion. And so, while the horse trading continues, the dollar wavers. April home sales fell nearly 6%, another 40K to 863,000 units, and the White House is reportedly concerned with rising housing prices, calling for increased construction. Case-Shiller has prices up 13.2% in March, a 15-year record increase. Still, maybe in reflection, the conference board yesterday put consumer confidence at a 14-month high. This morning, Reuters reports that Fed policy people are beginning to admit that they may debate stifling some economic support. That's according to San Francisco's Fed President Mary Daly. And so with Reuters reporting this morning on a boom in mergers and acquisitions, we take to the S&P, which closed up nearly 0.5% yesterday. We can see that momentum could be short-lived if we look at the limp RSI and not really much sentiment in volumes. On the other hand, on Friday, we had a similar setup on the Bollinger Bands, where a hesitant crossover into the upper band took courage and even broke above for a bit. The 20-hour moving average this time seems a bit heavier, but that could change as the bands narrow. Still ahead today, mortgage applications at 11 GMT and the 30-year mortgage rate. UK and French markets ended down yesterday, while Germany's DAX managed to hang on to a 5% gain. Germany bucked the trend with the help of mining stocks and a local cement maker's sale of US operations. The euro was hit hard in the gut this morning after Germany delivered a quarterly 1.8% contraction in Q1 GDP. The currency lost more than 20 pips, but then recovered thanks to upbeat business sentiment markers. There's not much change in cable from yesterday. We're still consolidating to 141.60 with volumes falling off as investors lose interest. But as we know, when volume drops, volatility increases and a breakout could occur. So again, we're lacking economic indicators except US mortgages. On home front, though, the kerfuffle between the EU and the UK on Irish goods conveyance could turn nasty. Once again, Asian benchmarks were mixed this morning. Australia, New Zealand, and Korea following the US down, while the Nikkei, Hang Seng, and Shanghai all turned north. The New Zealand dollar is chirpy thanks to the central bank's steady 0.25% interest rate and a tenfold improvement in the nation's trade balance for April month-on-month to $388 million. The year-on-year figure isn't nearly as wonderful. We're down from last year's $1.7 billion to this year's expected $730. Traveling west, Australian construction improved by 2.4% quarter-on-quarter in Q1, leading to a booming dollar. And in China, the yuan registered a 5-pip jump just after midnight as Xiaomi announced that an American court had lifted restrictions on its U.S. stock trading. The company is no longer designated as a military-backed company. The day before, a Chinese government commission approved a joint venture between Commercial Bank of China and Goldman Sachs, with the American company in a controlling position. Oil continues consolidating towards the $66 mark despite another 459,000 barrel drawdown. Traders were hoping for nearly triple that. But the threat of Iranian oil continues looming. The EIA will be weighing in at 2:30 this afternoon Greenwich time, and cryptos continue today up, but not as briskly as before. With Bitcoin, we're still below the psychological 40K level at last report, while gold soared past 1900 as the New York session opened yesterday. It's now resting at 1907. So far, gold's rise has been fitting in nicely with its Fibonacci retracements, and we're well above the moving average. That's a trend that's going to be hard to break. Gold's RSI has a tendency to stay above overbought for quite a bit, and with people still hesitant over cryptos, we could be seeing some value returning to the yellow rock. Meme stocks are up against, with GameStop soaring 16%, thanks maybe to last week's plunge in Bitcoin, and shareholders continue to disrupt company boards after BlackRock, that's Exxon's largest shareholder, is aiming to nominate 3 members to the company's board. The investment company allegedly wants the oil maker to invest more in renewable energy sources. In earnings, Intuit disappointed dismally in Q1 with a 6% miss in revenues. That's down from $120 billion in the previous quarter to 4.1. I doubt the tax report delay is sufficient reason. We're hoping for better performance from NVIDIA's markets open in New York. Meanwhile, Ford is expected today to announce 2 all-electric car platforms in attempt to catch up with GM and Volkswagen, according to Reuters. Well, like we told you, a dramatic week and 2 more days to go. We'll see you tomorrow.